Really probably not understanding context of the statements. I mean, you really need to use the financial statements together, especially in real estate. There's a tendency to gravitate towards the T12, but you really need the balance sheet. Probably more finance people over the years than accounting people, but you might have a project that's growing revenue really well, but then you look at the balance sheet and you realize their AR is growing just as fast. So they've got a problem where they might be charging the rent, but they're not collecting it. There's scenarios where you really need to get all the financial statements and look at them together and do a lot of trend analysis. Are things moving in the right direction? I spend over half my time forecasting what we're going to do in the next quarter than I do reporting on what we did in the last quarter. And if you are just focused on the past, you're going to get yourself in trouble at some point. And that's been very evident in the last couple of years, which is the change in interest rates. And we're seeing a corrections coming to the real estate market of, maybe people had a bunch of floating rate debt and didn't properly hedge it and their assets in trouble, or maybe their revenue is not growing as fast as they thought that it would. My biggest comment is just using the financial statements, getting all the financial statements and getting the history. Don't look at a balance sheet at a point in time. Try to get 3 months of balance sheets. Don't look at just the revenue for the particular month. Look at how the revenue has been trending for the last 12 months.